Kia ora. Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name is Helen Mattison, and on the program today, we'll be talking about investing in a commodity. Not oil, not gold, but water. The stuff that we all need to live. I'll be talking to Paul Brownsey, who is the Chief Investment Officer of Pathfinder's Global Water Fund, and who's been watching global water trends for about 15 years. But as always, before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome to the program, Paul.
Hi, Helen. Thanks for having me.
Water. It's something probably that we in the West take for granted somewhat. We talk about fluoride, we talk about chlorination, and I remember as a kid people complaining to the council that their whiskey didn't taste as good because of the treatment. I want to look at it now in terms of commodity, which a lot of people probably don't consider it is in New Zealand. What's your perspective on that?
Well, first I think maybe people were trying to put too much water in their whiskey, but look, my perspective on water is I don't think it's going to be too surprising to a lot of people. When we started the Water Fund back in 2010, it was really interesting because the genesis for that was a discussion with some advisors who we've been talking about commodities, like oil and wheat and corn and that sort of stuff. And this guy who's a bit of a larrikin said to us, hey, yeah, but what about the most important commodity we have? And I said, I'm thinking, what does he mean, oil? I couldn't really think it through. And he said, no, the most important commodity is water. It's the ultimate commodity because without water, nothing else works. And he was dead right. And so, interestingly, I was looking through our old files and I came across a original presentation we did back in 2010. And one of the pages says, water, the ultimate commodity, essential, scarce, and strategic. And I think that's still very much an apt description of the place water has in our society. Societies cannot function without access to potable water. And obviously there are a whole lot of environmental and economic issues around doing that. But water is fundamental to everything we do as a society.
How scarce has it become? We've got climate change obviously heating the planet. 15 years ago, that probably wasn't quite as acute. But has it changed in its scarcity and in its value?
Look, it's interesting. So in this presentation, we had 5 things we talked about as mega trends which affected water, and crazily, those five themes were very prescient because exactly the same things are faced by society today. So just going through them very briefly, the first one was demographic change. The number of people on the earth was just growing dramatically and still is. Urbanisation was a big trend, that people were moving from agricultural-based communities to urban-based communities, and that with that change came a much larger need for fresh water, both in terms of living in a house as opposed to living in a field, and having a higher standard of living, which led to needing more water, both directly and also in terms of virtual water from products that you consume. Agriculture and industrialisation was getting bigger and stronger. Agriculture is much more intensive, uses much more water now than it used to. Infrastructure, all these people have to have infrastructure to deliver that water to them and then take away the wastewater. So in developing countries, which were sort of around the equatorial belt mainly, there was no infrastructure, so that has to be built. And in countries like the US and European countries, the infrastructure is there, but often it's 100 years plus old, so it needs to be replaced and maintained better than it has been. And then, of course, the big issue, as you say, not such a big issue then, but definitely in our presentation, was climate change. At the time we said, climate change is having a profound effect on the environment. It seems to be making wet areas wetter. Welcome to Auckland. And dry areas drier. And unfortunately, a lot of the population growth and urbanisation growth was coming in those sort of drier equatorial areas, which was just putting more and more pressure on water. And so, to get around these issues, we posited the idea that, we really need an investment-led and technology-led response to try and, solve this potential water crisis.
If you'd like to invest in water, what are your options? I mean, the movie The Big Short has made popular water futures. Mm-hmm. I think it's Michael Burry, the US investor, has obviously talked a lot about that. He talks about water being blue gold, for instance. What are the options for the retail investor when it comes to water?
Sure. Look, there aren't a huge number of options. Water rights is a possibility, but again, how would people invest in those? And in any case, we kind of have a philosophical disagreement with, treating water as an investment commodity like that. We've seen that happen in some countries, and what happens is, large businesses tend to end up owning the water rights and using them for their own purposes rather than what's necessarily good for society overall. So we've steered clear of investing in any companies or funds or markets that are about water rights. We just think it's too politically a vexed question. My personal opinion is that water does need to have a value put on it, but that value should be done in such a way that it allows both governments and business to plan infrastructure around water, because we know it has a value, so therefore that kind of tells us how to direct capital to solve the issues around water. So I think water rights for us are out. The other thing that's out for us is bottled water. We don't really see that has any tremendous social or environmental value. In fact, it's probably a negative when you think about some of the ways in New Zealand that overseas companies have come in, paid a nominal amount to extract water from our underground reservoirs and then send it overseas as bottled water. I think that's a business which makes no sense to me, and we certainly don't want to put our clients' capital into those sorts of businesses. So that leaves us with the Pathfinder fund with really a couple of options. The first one is companies whose main business is finding, treating and delivering water to consumers, so utilities. And then the flip side of that business is they often have a sort of mirror image of that business, which is taking away the wastewater, treating it and then putting it back into the environment in a manner which can be handled by the environment. The other types of business we can invest in are companies that are probably industrial or technology based, and they're producing the pipes, the pumps, the meters, the treatment systems, the technology for running those systems, smart meters, network monitoring software, those types of companies which we'd broadly classify as industrial or technology companies. They make up about 60 to 65% of our portfolio at the moment, and so we see those companies as being very necessary for solving this long-term water issue that the globe faces, and for us to sort of provide capital to those companies and hopefully profit from what they do, I think is a good thing. Overseas, we also invest in some of those utilities that deliver water and take it away and treat it, but that's mostly a European, UK, US type company that we can invest in there. It's kind of odd that we actually can't really find good investments around water in New Zealand, and that's not because it's not an issue here and we don't have lots of organisations dealing with water, but here water tends to be, or the infrastructure around water tends to be owned by either central government or local government, so there just aren't that many companies here that we can invest in New Zealand. So
you'd like to see some infrastructure projects that you could invest in New Zealand?
Absolutely, and I think there'd be lots of investors for good infrastructure projects, because the infrastructure project can be independent of what the underlying thing is. There's infrastructure around water, sewerage, roads, airports. With all these things, it depends how it is implemented. But we do have a significant issue in New Zealand around water infrastructure, and I think if governments don't think about how to solve that, then all we're doing is kicking the can down the road. And the problems we have with water now, ask people in Queenstown, for instance, about drinking water. if we don't invest more money in the infrastructure here, there's going to be more Queenstowns in New Zealand. I saw a report the other day from one of the government agencies saying that they think we need between $120 billion and $185 billion worth of capital invested in water infrastructure in New Zealand over the next 30 years. Now, that's a significant amount when you think about how big our economy is, right? That's really, really significant. That's like 1 year's entire growth in our economy invested in water over the next 30 years. I don't think government can do that. So
no, surely there's a hybrid with private equity or companies.
Yeah, so what we don't have a lot of in our fund at the moment, because there just aren't that many opportunities around water, is infrastructure projects, right? So infrastructure projects are typically great. You apply a bunch of capital to building something, and then over 30 years or even longer, you get paid your money back by the users of that infrastructure, who pay a fee for the use of that infrastructure. Now, that's a really good model, because you can combine government control, if you like, with free market capital to produce some long-term assets which are really necessary. Our fund, that's the sort of thing we'd love to invest in, right? Because it's relatively low risk, it's stable cash flows, it's secured by an asset, it's good all round for investors.
Let's step back to 15 years ago, 2010, when you did set up the Global Water Fund. At the time then, you talk about the issues being the same as what they are today, but it does sound like investors are probably more on board with the need than they were. I mean, how was it received back then?
Oh, we launched our fund with John Berry and I spent several months road showing our fund around and visiting investors and so on, and we launched it with great fanfare and nobody came. So it was a tough introduction to running funds in New Zealand, really, because we really struggled to get money into it. And we'd visit an advisor, and the advisor say, "Oh, this is a great fund, but it's just not for me. I don't have anyone that'll use it." Oh, hang on, that's not true. I've got that hippie client who inherited some money. They might be interested in this sort of stuff. So we were really battling against thinking which sort of hasn't quite evolved as much as it has over the last 15 years, I guess. So it was pretty small when we started, and we ran it for a few years with not much money in it. But John and I were both committed to it and quite passionate about it. So we thought, in sort of Field of Dreams style, if we build it, they will come. They didn't come initially, but eventually they did. Yeah.
But there are still some early adopters in the fund.
Sure, absolutely. We've got investors who have been in there since day one, almost. And I think for me, this fund is a good intersection between thinking about how can we invest, wisely and productively in terms of society and the environment, and also good economic returns, which ultimately, you can build whatever fund you like, but if it doesn't have good economic returns, people won't use it, and nor should they, right? But I think this is a really good combination of, we've got some long-term issues to solve, and solving those issues will create long-term tailwinds behind the right sort of companies. And as we say, that has not changed. Those same things from 15 years ago are the same issues we're grappling with now, and I think that's a great way to invest, because one of the secrets about investing is that it's really hard in the short term, but as your time horizon gets longer and longer, investing becomes easier. And if you can identify shifts behind the economics of what you're doing, and get in front of those, then you can have a good long-term investment. I think this fund's done somewhere around the 9% per annum since inception. So that's a pretty decent long-term return for a fund over close to 15 years.
So if we look at the makeup of the fund today, are we talking 50 to 100 companies, but in any one time is there around about 60 companies in the fund, would you say?
Look, I haven't done the exact count. That's one piece of research I didn't do for you, I'm sorry. But typically it's around 55 to 60 companies in the portfolio, and we say we're going to be within that range of 50 to 100. That number of companies is really a function of how many suitable investments can we find for the fund.
What about tech though? Surely with metering and filtration and sanitation, all the kind of buzzwords in terms of water, there's so many aspects to it. Surely tech is advancing, and wouldn't you be looking to some of those companies? Are they popping up?
Yeah, absolutely. So we only invest in listed companies. So with this fund, if it's a private equity transaction, i.e. an unlisted company, typically early stage, we see a lot of those for our KiwiSaver funds where people come to us and say, hey, I've just started this company, we're doing this and we're trying to raise money to grow. And we'll look at that for our KiwiSaver fund, but not for the water fund. So some of those, it's more about the nature of, the long-term investment nature of KiwiSaver. If you assume the average person investing in a KiwiSaver is 30, 35 years old or something like that, we're talking their money's going to be there for 30 plus years. And so we can have a little bit more certainty around putting some of the money into less liquid assets.
Right,
so those less liquid assets may give us a great return, but we've decided to retain that just for the KiwiSaver. So in the Global Water Fund, we'll still invest in smaller companies, and we've got a couple of small Australian companies which are quite interesting, for instance, but they're all listed companies. And that's because, heaven forbid, if a lot of people want to take their money out at once, we don't want to turn around and say to them, hey, you can't have your money out because we've got these illiquid investments. So we just try and keep the fund liquid as the water fund, obviously. So.
Now, Paul, there are a number of water funds and global water funds. We have at least 6, I think, on the platform, for example. Investco is one, mainly out of the US, from what I can gather. Some of them are listed on the New York Stock Exchange and maybe in the NASDAQ and the like. Is your fund different to those, though? I mean, the multiples look slightly different for a start. Perhaps you can explain that.
Yeah, so those funds you're referring to are mostly ETFs or exchange-traded funds. So the exchange-traded funds, they're a perfectly valid product, but they are different. So they are a passive investment. So maybe once a year or once every 3 years, the manager of that exchange-traded fund says, okay, we're choosing 50 water stocks, here they are, let's just own those for the next year or 3 years or whatever. And so there's no changes made to the portfolio, there's no active management. And that's fine from the perspective of, it's designed to track that index of water stocks. But it's a very passive way of approaching markets. And our belief at Pathfinder is that, we are long-term investors, so we don't try and react too much to short-term news. But in the same way we're trying to identify, these long-term trends around water, we try and think about markets in a long-term way as well. And so, we can change the amount of risk we have in our portfolio. So right now in the water fund, we've got about 12% cash. And that's because markets have been doing it a bit tough over the last 6 months, as everyone on Sharesies has probably noticed when they look at their numbers. So we've decided to be active. And, our belief is that over time by, a bit more risk management, choosing, hopefully better companies than just all of the companies that are available, we can do better in the long run than those sort of passive funds. But equally, I'm never going to criticise somebody for owning a passive fund. If that suits your personality and your investment goals, then go for it.
That's a nice segue into the world of risk. And looking at water, it's not a low risk investment. When I look at your fund, for example, it's number 6 on the scale of, that goes up to 7 in terms of risk and return and the like. So is that about being in for the long term? I mean, it's not an investment probably for everybody. There's also challenges with investing in water. I mean, there's all sorts of things going on. So perhaps let's unpack some of those challenges.
Yeah, so in terms of, where it belongs for an investor, so what you're alluding to is the scale we have for risk, which all retail funds must have the scale, and it's based on how much your prices sort of deviated from average over the last 3 years, I think it is, in New Zealand. And that's a good measure, but it's a relatively crude measure. Because what it doesn't do is it doesn't really allow you to think about how your fund behaves when it's with other assets and other funds in your portfolio. So I would say about the water fund is that it is a single asset class fund, so it just invests in equities. So we don't get the diversification impact of having some, property stocks and some bonds and some, cash and things like that on a regular basis. So that's why most of the single asset class funds will have a higher volatility than something like a KiwiSaver fund, which has got a blend of different assets.
Yes.
And that's fine, but it just means it's for a different purpose. So if somebody said, just remember, I can't give financial advice because I'm not a financial advisor, but if somebody's looking at using a fund like the water fund, it fits best with other things. So it shouldn't be your only investment. People should think about diversifying and saying, look, I'm going to pick, let's say, 5 things to invest in. They should be a little bit different, so that if there's a market where one does really badly, hopefully the other 4 are doing okay, and so you get this diversification effect of having exposure to different asset classes in your portfolio. So the water fund is good, but it is a bit of a specialty fund in the sense that it's just equities, but actually it's not just equities, it's just equities which come from primarily the utility sector and the industrial sector. And it's not just those, it's also companies from those sectors which are just about water. So you can see that we've actually created a fund which is designed to have a specific risk exposure, which is around water companies. Now, it's not hard to find a short-term environment where water companies can either do very well or do very poorly based on other things happening in the economy. So it's important to put any investment alongside the other things you invest in, which can range from your house, stocks and shares, your Pokemon cards, or all those sort of investments people have, right? So,
what about benchmarking? I see on some of the documentation with the water fund, you've got the NASDAQ OMX Global Water Net Return Index, I think it's called. How does that work? I mean, is that what you measure yours against, and what sort of measure is that for a retail investor to make a call on? Yeah,
so you can look at the holdings of that by going to the website for that index, and what an index is, it's really just so indexes exist for pretty much every corner of the markets, right? And what the index is all of the things that you can possibly invest in, and it's usually weighted by the size of those things individually. So if we think about the New Zealand Stock Exchange index, for instance, right, the NZX 50, that is an index which is the equivalent of you as an investor buying all 50 stocks on the NZX 50 in the weights relative to the size they are. So Fisher & Paykel is very big, so you'd have a lot of that. Other companies are very small, so you'd have a small amount of those. But if you bought those companies in the same weighting as the index, then your return would be exactly the same as the index. Now, that's a passive exposure because all you're doing is buying the whole market, forgetting about it, and coming back and seeing what it's done in 5 years' time, right? So that water index we follow is exactly the same, except it just looks at water companies. So I think their rules are something like we look at every company which has more than 20% revenue from water activities, and they go in our index. And so they've probably got 150 odd companies around the world in that index, but they're all companies which talk about getting a big chunk of their revenue from water. Now, some of the companies in there aren't water enough for us, so we don't invest in them, and that's one of the reasons why we don't invest in that index per se. But we're happy to measure ourselves against it because if somebody didn't like us as a fund manager and just wanted a passive exposure, they could find a product based on that index and invest in that.
Looking at that vexed issue of bottled water, I mean, there must be a number of companies who have made big money out of that and who do see a future in it.
I'm sure there are. I'm not equating water with tobacco, but there's also a lot of companies who have made a lot of money out of tobacco, right? So just because you're a company making money out of something doesn't mean that you're providing an environmental or social benefit to wider society, which I think is a core part of what companies should do. If I don't think of anyone in business, even in New Zealand, who wants to go back to the 1960s or 70s model of companies where you don't care about anything except managing your legal liability and making as much money as you can. And so that's, I mean, I don't really want to rain on bottled water companies because I'm sure there's some very good people running them and what have you. It's just not for us. I personally don't think it has a real benefit. I mean, I'm happy to fill my bottle out of the tap, right? So I can't taste the difference between tap water and bottled water. So call it a personal bias, but that bias, I think, has very good social and environmental reasons why we don't want to invest in bottled water. And I'm not saying these companies are investable, but we've all heard the stories about offshore companies coming into New Zealand and essentially arbitraging our lack of regulation around water extraction and pumping millions and millions of tonnes of water out of our springs and exporting it overseas. I just don't think it's a business we want to invest in. And also, to be fair, I don't think there are many sort of pure bottled water companies that we could invest in. A lot of them are private or they're owned by much larger conglomerates as well. So happily, we can avoid them without any great stress, I guess.
Looking at water around the world, desalination is obviously something that we're going to have to think more about, and probably here in New Zealand too at some stage. What can you tell us about that?
Look, I'm no expert on desalination. Some of the companies I think in our portfolio have desalination businesses, but it comes back to economics at the end of the day, right? You're taking salt water and you're using one of several forms of technology to take the dissolved minerals out of the water and leave you with fresh water, and there's various ways of doing that, with different types of membranes or boiling the water and distilling it essentially. So there's lots of ways to desalinate water, but it's expensive, and we can see that the only places where there are existing desalination plants are where you have a combination of a relatively affluent country and a severe water shortage. So parts of Australia have got desalination plants, although I think there's been issues around commissioning those. But the other place you really see a lot of desalination plants are in countries like Singapore, which is, despite being on the equator with lots of rainfall, is water poor because they don't have the catchment area to catch water, so they use desalination. And also the Middle East and some of the oil-based economies. So again, I don't have the specific economics in front of me, but just by the very nature of where those plants are, we're clearly a long way away from it being economically viable at the moment.
Well, if we look at the future of the Water Fund, it's been around nearly 15 years. Obviously, it's going to continue. I mean, what do you see in terms of changes, in terms of investment, or at the moment, are you seeing it pretty much going along as it is? Or what do you see as the future with water?
Yeah, look, I hope it goes another 15 years, but I'm not looking forward to looking at it in 15 years' time for personal reasons. But no, look, I think it's been a good example of, sticking to your knitting, really. I look at the way we manage it now to how we managed it, 14, 15 years ago, and it's broadly the same. Yeah, we have better systems now, we have better technology, and we have more people, but the philosophy behind it is still very much the same, which is, think about the long-term economic and social tailwinds that are driving parts of the economy, and then find companies and position them in front of those tailwinds. And I'm not sure we're looking to do it differently going forward. I personally believe as an investor that the longer you look into the future, the easier investing becomes. If you said to me, okay, it's sort of mid-morning or late morning now in New Zealand, and if you said, okay, what is Fish and Pike or healthcare stock going to do in the next hour? Is it going to be up or down? I literally have no idea. I literally could not put any kind of confidence on that. Now, if you then say, what about in 1 year or 2 years, or is that company going to be more valuable in 5 years than it is now? I'd say pretty much with certainty, it's going to be more valuable in 5 or 10 years than it is now. So, in a sense, the longer your horizon for planning and investing becomes, the easier it becomes to have higher conviction calls on stocks. And so, coming back to water, we look at those 5 big issues which we, with incredible foresight and skill, wrote down those 5 things 14 years ago. If John and I went through the same process now, we'd write down exactly the same 5 things, as issues we're facing. And, it makes sense to build our fund around those things.
Thanks, Paul. Thanks for your insights today, and thanks everyone for joining us today on Shared Lunch. You can follow the podcast on Spotify or Apple or wherever you get your podcasts. Do leave us a 5-star rating and tell us what you'd like to hear next. Enjoy your week.